Let's go over some of the high yield ETFs that use some of the major funds of ETFs like the S&P 500, the NASDAQ, the Russell, and so forth. And I'm going to compare the different fund managers like YieldMax, Defiance, Roundhill, and KURV. Stick around. I think you're going to like this one. Hello my friends, this is Legend. Today I'm going to do a little something different. I'm going to compare the different fund managers like YieldMax, Defiance, Roundhill, and KURV. And they all have some similar ones that use like the S&P 500, the Russell 2000, the NASDAQ, and so forth to write their cover calls against. And let's just kind of compare them and see which ones are doing the best and which ones aren't doing so well. So we'll start right off here with YieldMax since I've got this one already pulled up. Now, granted, YieldMax just really started doing the ones for the S&P, the Russell, and the NASDAQ. So it's really kind of unfair to compare them with the other ones. Seems that the other ones have been around a little bit longer as far as having those available, whereas YieldMax opened these up at the time right before the market started dropping, and that was that February the 20th. And you'll start seeing that that's a very important date to notice, that on February 20th is when the market started falling, and you'll see that similarity throughout all of these. So we're going to compare them on the Webull chart and just kind of show you what they look like, how they're doing, and you can kind of decide for yourself which one is better for you, which one makes sense, which one is stable. Right? So that's something that you'll have to decide on yourself. But I'm just trying to do a little bit of work for you and do some graphing here to show where some of them are a little bit more stable, trying to, say, trade within a range versus trading in a downward trend, right? Or an upward trend. Either one. So before we get started on that, if you don't mind, please subscribe if you're finding any value in these videos. It would be much appreciated. So let's jump right on in. Okay, so here we are on the Webull chart. I'm starting off on the YieldMax. Like I said, when they started and opened theirs is when the market started dropping. So they really have just timed it poorly, but nobody knew the market was dropping. It was just bad luck on their part. So as you can see here, let me put that cursor right on that February the 20th right here. So they were only out maybe 5 days before the market started dropping. So really, there's no way to know how well they're doing or how well they could have done with this one. And this is QDTY. This uses the NASDAQ 100. But like I said, there's really no way of knowing. Now, they do pay weekly dividends or distributions here. And they've been paying, looks like, between roughly maybe about 25-cent average, I would say. Just kind of throwing that out there. But like I said, right there on that February the 20th, they were trading kind of, stable-ish sideways. And then all of a sudden, that's when the market started tanking, right? So kind of hard to decide whether QDTY is a good investment or not. Just no history yet. Here we are on the RDTY. Now this one here, it came out on March the 6th. So this one was a little bit after that fall of February the 20th, right? So this one here, they actually were able to catch more of that bottom. And as you can see here, it's kind of basically trading sideways. And that's really what we're looking for these ETFs, is to trade sideways to up. And if it does go down, to not go down tremendously, right? to stay within a range, because if it can stay within a range and still pay us our distributions, then that is exactly what I'm looking for. So far this one, RDTY, which is the Russell 2000, it's trading somewhat within a range here. And we can draw a couple little lines. Now, I don't have a whole lot of data here to really, do anything with, but just kind of throwing some lines in here. As you can see, it looks like it's trying to trade within a range here. And this is not much data to really review. And again, like I said, the YieldMax ETFs for these S&P, the Russell, and the NASDAQs are new. So this one here looks like it's trying to trade within a range. But again, not much data. SDTY, now again, as you can see, like I said, it's kind of very similar to the QDTY, where right here is that February the 20th right here. And then the market started falling. So as we can see here, if we draw supports and resistance here, not including that drop from after February the 20th, it looks like it was trying to trade sideways. And then, of course, the market fell, so it fell on out too. But again, not much data really to make a decision here. They're just too new. So now let's move on to KURV. So here we are on KURV. This is KQQQ. Okay, so on the KQQQ, as you can see here, I've drew a couple lines here, and you can see where it was staying within this range. And it was actually an upward moving range. So that's a good sign, right? But again, like everything else, around that February the 20th, that's when it fell on out. So you really have to look at this as being something that you're not using for your evaluation. This part after that February the 20th, you really kind of got to block that out because the entire market fell. So that, of course, will cause everything else to fall out. So I'm trying to evaluate the data before that date. So as you can see, it's been moving up as far as an upward trend. So you're getting some price appreciation off of this one, but what are the distributions for this one? Well, this one here, as you can see, it's actually paying monthly. And the monthly distributions here are 8 cent, 14 cent, 14, 15, 15, 15, 15. So it looks like it has stabled out at around 15 cent per month per share for the distribution for KQQQ, which is with the KURV fund manager. So here you're getting good price appreciation, but you're not really getting a whole lot on the distributions. So for this one, it's more of a price appreciation play versus a distribution play. Now you're getting 15 cents. That's still good free money, and the price is increasing. So long term, this should be okay. You should be all right with this one. And for this one, I would think long term, this one here could continue to go up and continue to pay out that 15 cent distribution. So it doesn't look too shabby. WDTE, and this is over on the Defiance ETFs. Now this one here, as you can see, when it first came out, it was doing monthly distributions, but it was stair-stepping, right? So it would go up a little bit and then pay out the distribution, and then it would fall, right? And then it would go up a little bit, they'd pay out the distribution, and it'd fall. Of course, that's how they pay the distributions out. They pay it out of the price of the stock. But you don't really want to see that high continually to be less than where it was at the month before. So as this one, as you can see, it's more of a downward trend staying within that range. But that range that it's within is going down. Not a great sign for WDTE. They do pay out weekly distributions, and they look like they're probably around maybe 25 cents or so, maybe on average 20 to 25 cents. So you have to kind of figure, are you getting your money back out of a 25 cent per week times 4 weeks? So you're getting $1 out of each month, give or take. And over the term here, if we start from October up until now being March, that's 5 months. 5 months, $5, right? So what was the price right here? And we'll just keep the numbers even here. We'll say $42, subtract out $5 from that, and you get $37. So, and the price right now being at $35. So your break even would be 37, but the current price being at 35 means you are down in the play, even after getting paid the distributions. Now I'm assuming a 25-cent per week distribution, so that is an assumption there. But if that's the case, even if you're being paid the distributions along the way here, you're probably still going to be down in the play by the end date here of where we're presently and currently at. It seems to be below your break even of 37. It's sitting at 35.88, so 36. So you're about $1 down, not tremendous amount down, but it is down. So probably not the best of the plays. Let's check out a different one, IWMY. It's another Defiance ETF. And again, the same way. And those distributions here are roughly maybe 25 to 30 cents. Kind of hard to guesstimate here. I'm just kind of randomly selecting a couple of them here. And it looks like maybe 30 cents. So if we say 30 cents, and I'm assuming also saying we got in at this date right here, right? So at that date being at, we'll say $35. At that same time period, that would be 5 months. Now that 30 cents is a weekly, so that 30 cents times 4 is $1.20. Now the $1.20 times 5 for 5 months is $6. So let's see if we're at break even or above on this one. So if we're at $35, 35 minus $6 would take us down to $29 break even, and the current price is $26.77. So we're at about roughly $27. Our break even would be at $29. So this one you would also be down. QQQT. Now this is yet another Defiance ETF, and it's been out for a little while. It came out, looks like around June 2024. And as you can see here, it's been staying within this range here. Now I like that, right? That's what I like to see. I like to say one that's going to stay within a range if it's going to pay out some decent premium. And let's see what the distributions have been. So we've been paid 30 cents, 32, 32, 31. So looks like maybe, again, we're at that little over 30 cent distribution. Now this one here, as you can see, it again is monthly. There's 9.3 and then 10.1, 11.1. So this is a monthly at 30 cents. So that's only 30 cents per month for QQQT. But the price has been stable. It hasn't been going up, but it has been staying sideways, minus the fall from the stock market fall. So for this one here, looks like this one here could be a possible long-term, staying stable, staying within a range somewhat, and paying out 30 cents per month. So a little bit different from KURV, where KURV we were getting some price appreciation. If you remember, we were getting that price appreciation, but you were only getting about 15 cents per month on the distribution. And for QQQT, you're not getting really price appreciation, but you're getting 32 cents per month on distribution. So that's something that you just have to kind of figure out. What's your end plan for this? Are you in it for the price appreciation, or are you in it for the distribution? Price appreciation, you might be wanting to look more along the lines of KQQQ for the KURV funds here. But if you're looking for possible higher distribution, you may be looking at QQQT. So it really depends on what your plan is. So moving on here, we got SPYT. Now this is off the S&P 500. This is using Defiance as well. And as you can see, it has been holding strong, staying within that range. So I like that. and then it fell out, and we all know why it fell out. For the 100th time, it is due to the market drop. So, staying within what has been more of, air quotes norm, this here has been staying within a range. So what are the distributions that it pays out? 32, 33, 33, 33, 33. So this here has been paying out about 33 cents per month on distributions. So just like QQQT, the SPYT has been paying out a little over 30 cents per month in distributions and staying within that range, trading sideways. So I like that as well. QQQY is a Defiance fund using the NASDAQ 100. Now, this one here, it's a little bit of a different story, isn't it? We're not trading sideways. We're trading in a downward trend trough here. So, as you can see here, if we use that same date, around that October date, and then we use up until current time, that price being around about $34, and the distributions are about 25 cents, we'll say, and that might be a little high, that might be right on it. I don't know for sure, right? I haven't done the actual average of the distributions, but there's some 29, there's some 28, but then there's some 19 and 22 and so forth. So we'll just say 25 cents. So that's that dollar per month on distributions, and going from that price right here at $34 times the 5 months is $5 drop. So at 34 minus 5 is down to $29, and we're sitting at 27. So again, this one here, since it is going down, it's not holding that NAV. It is losing some money here, even after you're earning your distributions. So not one of the better ones to be in my opinion. So now let's move over to another fund manager, and let's go to Roundhill. So this is QDTE. On QDTE, you can see it's staying within a range, but the problem is it's a downward range, and it has been dropping throughout. And as far as in distributions go, it's paying out, there's a 24, there's a 25, there's a 15, a 27. So we'll say, again, maybe 25 cents, maybe a little bit more, but I'm just going to say about 25 cents per month on this one. And since it has dropped from 46 down to 35, and that's over a period of about 1 year, so that's 12 months. So that would be a $12 drop, right? So that's $1 per month times 12 months for the year. So that's a $12 drop from, we'll say from $46. $12 drop would be $34. We're sitting at $35. So you might be at about break even on this one. Now that's assuming a 25 cent per distribution. Again, I have not actually done the average of those distributions, and you can do that if you are in this one and want to look further into this one. But in my opinion, it's on a downward trend, not a good sign, and only paying out 25 cents or so in distribution. It can't make up that fall. You're just getting paid a distribution for the price of the stock as it's falling. So you're really at about a break even here. It's not going good so far. Not really looking to break even on these. I want to make some money off of them. So moving on to RDTE. And for RDTE, a little bit of a different look here. As you can see, it was trading sideways, and then it fell here on around about mid-December, and then it was trading sideways in this range until we hit that market drop here on that February the 20th, and then of course it fell down. So this one here is kind of stair-stepping. It's stair-stepping down, so I don't really care much for that either. The problem here is this was more of a support where it was bouncing off of, but when it broke that support and fell down here. Now it becomes a resistance. As you can see, now it's a resistance. So now it comes up, hits it, and falls down. And then comes up, hits it, and it falls down. So if it hits it enough, maybe it can break through. But then we had the market fall, so it just brought it all the way down to here. So RDTE is maybe one that you can watch to see how it does react once our market starts getting to more of a stable position. But for now, I don't care much for the fact that it is stair-stepping down. Now you can take and add up all your distributions and find out if you're able to actually earn and make more than you're actually stair-stepping down here. I haven't done that part, and you can look into that if you are in RDTE or look to get into it. I'll let you get into that part of it. Just add up all your distributions, take it from whatever date that was up until current date and see if it's worth it or not. I just don't care much for just the look of it because of the stair step down. But if you do a trend line, you know, I say I do a trend line and I draw something in here, something similar to that right there, you can see that it has been trending down. So I don't really care for that part of it. I want the high yield ETF funds to actually trade sideways or trade up. You know, I prefer them to trade sideways and pay high premium or high distributions because I want it for the distribution, not necessarily for price appreciation. I'll get into other stocks for price appreciation. I'm looking for the distributions for these high yield funds. And the last one for Roundhill is XDTE. Now XDTE, that one there looks a whole lot better than an RDTE did. XDTE, as you can see here, this one is off the S&P 500 and it has been staying just right within that channel. Right? I mean, just staying right in that range. You know, if it broke out, it did, and then it came back up, right? And then stay with that range. And then, of course, we all know what this is. That's the market drop. So if the market didn't have this, I could see this one just sitting here, maybe drop down below it a little bit and then coming right back up as it wants to stay within this $53 to $49 range. So I like this one, XDTE. I think this one here could be a very interesting one. And let's see, what kind of distributions does it pay? It's 38, 26, 22, 21, 18, 36, 23, 25, and the current one is 32. So not bad distributions, and check it out, that's weekly. So XDTE, man, that thing looks like it is rocking it. I really like this one, and I saved this one for the last for the people who do stick around and watch the full video because this one here I'm not in, but after kind of looking at this, wow, I kind of really like the XDTE for Roundhill. I like the weekly payer distribution of about 30 some cent. I mean, that's awesome. Let's just look at the current ones. 32, 24, 14, 20, 22, 23, 17, and 25. I mean, that's some nice distributions, honestly, for a 49 to a 53-ish range that it normally stays within. I really like this one. Very interesting. And for a bonus here, let's take a look at YMAX. And I know that's a little bit different. It's not off of the S&P 500. It is a YieldMax fund. It has been out for a while. But let's just see, does it stay within a range? And does it look like it beats the XDTE? Because right now, I'm seeing XDTE being the one that I am interested in getting into now. So let's check out YMAX just for fun. And as you can see here on YMAX, overall, we are looking more like a downward trend. So if we draw us some trend lines here and we'll just see how we can capture the most of the candles here. And let's do a trend on top, and we'll take it from here and we'll say something like this right there. So as you can see, YMAX has been on a downward trend. Very interesting. Now, it started out, it was paying monthly, right? It was paying monthly distributions of about 70 cents. And then it went to weekly, and the weeklies have been paying out about 22, 24, 13. So it's been paying roughly about 20 cents. And here lately we have had some low ones. There's a 19, 15, and we've had some lower than that, right? There's a 10 cent. So for YMAX, which is the one that I was using for more of a stable because it was more diversified, it's the fund of funds of YieldMax funds, but I was using it as it was more diversified than your single stock ETFs, whereas if that stock drops, then so does the entire fund itself, right? Because it's off of one stock, kind of all your eggs in one basket. Versus the YMAX, it is diversified, but it has been on a downward trend within this range. So that's very interesting. I am almost thinking that XDTE, I'm really kind of liking this one. And the fact that now we are low, we're in the $46 range. We might can find some kind of stability right in here in this same area, kind of like what we did right here. So I might look to start buying a few shares of this one just because I like the history of this one. I like the fact that it's trading sideways for the majority of the time, not counting the market drop, and it's paying out, 20 some, 30 cent, 21 cent, 20 cent, 25, 32. I mean, it's paying out some pretty nice distributions weekly on top of that. Now, please do not take any of this as anything that I'm telling you to buy or do. Do your own research. I'm just telling you what I'm seeing and what I'm starting to like here. And I'm starting to really like this XDTE. So anyway, so I did this little breakdown of all of these. I had a comment in one of my videos that someone was asking about some differences between them and which one was better and so forth. And I can't necessarily tell you what's better, what's not, and which to get into, because that would be financial advice. And we all know that I do not give financial advice. So, but I can show you on a graph, and you can make your own decisions of what looks good. And I can tell you my opinions, and I can tell you what I'm doing. But again, that is what I am doing, and those are my opinions. So please take them as such. So I think I'm going to wrap it up right there. This one's a little bit of a lengthy one, but I think there was a lot of very interesting things that we went over here. We compared a lot and kind of saved the best for last, in my opinion. The XDTE, I'm really kind of liking this one. So don't forget to like and subscribe if you enjoyed this video. It'd be much appreciated. It does help the channel out, and it does send this out to other people who may be trying to figure out which ones to get into. And there are other funds out there that also utilize these S&P 500s and such that are high yield. There's so many out there. You can't keep track of all of them, but I wanted to compare the ones that everyone else was talking about. So as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.